Welcome. So it's been almost a fiscal quarter since our last video, so there's been a lot of changes since June into September now, almost October. And also, as you can see from left to right here of our stocks, some of you may have noticed that there's a few stocks missing or maybe a few stocks added in. But really what I want to go through today is the exponential growth in the dividends that we have so far. So the current value of our portfolio stands at 7,193 and 42 cents. Now, first of all, I want to go through the dividends in that fiscal quarter, and then I'm going to go through each individual stock of where we're standing, and there's also a few missing or a few additions and something new in here. So, dividend income, what's it looking like? So in this period, which is the 3 months kind of running from the start of June to September now, almost into October, we have $73.98, which almost accounts for about 60% of the dividend income altogether, which in total is $133.12, right? So the last 3 months, and when I haven't really been making videos, I've been slowly making, dividend income, and that's quite a substantial amount compared to what we had previously. Taking a look at here where this dividend income is coming from, right? So from the companies we hold. So we're going to look at in this 3-month period, we're going to look at how many shares we have and also how much dividends we've gotten in that 3-month period from June to now. So top of the list is Walgreens Boots Alliance, where we have almost 37 shares, which was $21, okay? So they're paying quite a lot. That stock is quite down a bit as well. We'll discuss it later on. Then we had 3M, which was 7.5 shares for $11.40. We had Altria with 10.6 shares for $7.71. Realty 16.4 for $6.76. Kellogg's, which is a UK company, 10.8 shares to the value of $6.38. Coca-Cola 13.4 shares, $4.80. Exxon 2.3 shares, $3.34. Chevron 1.7 shares, $2.78, and then just a few extra ones. We'd Federal Realty, T-Rowe, Microsoft, Intel, Amcor. So Federal Realty, T-Rowe, Microsoft still substantial notes in the $2 amounts. Amcor, which we'll discuss later, is now gone. That's why we're not listing the shares here. 49 cents, and Apple 42 cents. So looking at our dividend stocks, right, and where we're standing at the moment. So there has been quite a change since the last video, and I'll discuss that as we're going through here. So first up is Federal Realty, 3.3 shares to the value of $293. We have Chevron and Exxon, 1.7 shares for Chevron, 2.3 shares for Exxon. I am looking at increasing Exxon, but I'm looking for a better price, right? I kind of want to get higher up in the oil at the moment, but it's up at the moment. Well, Chevron is down and Exxon is up because the oil price obviously is heading up because of production constraints. On the next list, we have Coca-Cola, 3M, and Microsoft. So Coca-Cola, one of our larger holdings, 13.4 shares to the value of $728. And 3M as well. I'm kind of buying the downturn here because 3M were down because of that lawsuit. They had a lawsuit, but that's kind of been settled now. So they've slowly been going up again. So I kind of think my philosophy on that is working out quite well. So they're almost $700 there. And obviously we have Microsoft, blue chip, cornerstone of the portfolio, 2.2 shares to the value of $666 and $53. Intel, one of my other kind of riskier bets, 14.8 shares to the value of $502. So my idea around Intel is they were down, they cut their dividend, they're cheap at the moment, they're actually up at the moment from where I bought it at, so we have 14.8 shares, right? If their foundry bet comes true, which is they're investing in making their own foundries in the US to make chips for both themselves and for other companies, which is quite a demand for, which they, looking at the news today, they probably won't actually break even on those for about a year's time, but it's a long-term bet. Apple, another cornerstone like Microsoft, 2.3 shares, 377. I really do want to buy more Apple. However, the price is quite high at the moment. I would like to maybe get up to 1,000 there before the end of the year, but we'll see how the price goes. They have been going down because of the recent launch of the Apple iPhone 15 and the Apple Watch. Investors didn't really respond too positively to that. Next up is Kellogg's, which is my only UK company at 10.8 shares to the value of $608.88. So kind of happy where that is at the moment. It's my only UK share. Most of them are US. Where I want to see that go is maybe increase next year. Kellogg's, they're not really growing that much, but the dividend is pretty sound. Next up is T-Rowe, 2.5 shares, $257. not really much to say about that. Altria, which I've been increasing kind of consistently over the last couple of cycles, particularly in the 3 months or 2 of the 3 months that I was not making videos. So we 10.6 shares to the value of 227. And obviously Realty, another big one in the portfolio, almost $1,000, 16.4 shares. So Realty have seen better times. They're down at the moment, but it's just a good opportunity to buy more, right? They're my only monthly dividend payer. And I think it's natural that they're down a bit. You know, our REITs at the moment are kind of looking a bit weird. Now, with Realty in particular, it's mainly probably because of, you know, offices, stores, stuff like that. So then finally we have Walgreens Boots Alliance, one of our bigger shares as well. So 37.39 shares to the value of almost $800. Now you will notice 2 missing here, right? So Amcor, I got rid of, right? Amcor was a kind of a packaging company, and to be honest with you, I made a loss of about $12 on it. But I was getting rid of it. Their cash flow is terrible. Their growth is terrible. I would not recommend that stock. But obviously that's not financial advice. I'm just saying personally for myself. And also Kroger. So I was looking at Kroger's balance sheet. I was looking at their cash flow and their ability to pay dividends in the future. And they're also closing a lot of stores from when they merged with Albertsons. So I got rid of Kroger. I made a slight profit of a couple of dollars in that. So I was kind of just happy to get rid of it out of the portfolio to get better opportunities or maybe invest further into the existing holdings. So a new addition to the channel and to the portfolio are ETFs. So I've only done dividend stocks so far, but now I'm diversifying into ETFs. And the one I bought is Vanguard's S&P 500. I think it's a UK based one because I can't buy the US one. It's VUSA basically, except it's on the London Stock Exchange, so it's in pound. So why I've done this, right, is I think hedging your bets on dividend stocks alone, you know, if you have the time and the expertise is great, right? But I think being able to have an ETF which has shown solid results, you know, an S&P 500 tracker over a substantial amount of time is kind of a safer bet. So I'm kind of making my portfolio less risky by getting into this. But as I said, I only have 1 share in that. I actually took some of the money that I got from Amcor and Kroger sales and just put it into that recently. And I have that in a different pot, right? So when we're going through this in the future, I'll be discussing dividend stocks and then I'll be discussing ETFs because I'm probably going to either increase the ETFs or index funds or maybe buy some new ones, right? So that brings us to the end of this update. So this is Mark 5 Mark Portfolio. Any questions, put them in the comments, and thank you very much for listening.